Hello and welcome back. So this video comes after a request that I received from a subscriber through our Discord channel, and if you are not part of it, you can find the link in the description below of this video so that you can join and we can discuss about all sorts of things regarding investments. It's a new channel, a new Discord channel, a new server really, and some people have already joined and we're having some nice discussions. So if you want to ask anything or suggest a new video, and generally talk with a lot of people about different investment topics, come over. We'll be waiting for you. And so the subscriber of Investors Heaven asked me if I would make a video about investments and stocks specifically that can do well during a downturn, during a recession. Now, I want to explain a few things about this in terms of general investing, and also potentially point you to some industries and some stocks specifically that can do well during a recession. The most important thing about value investing is that if you do it properly and if you really examine the companies that you are investing in, you are not really scared of recessions. In fact, you may be welcoming them. So, because in a recession, inevitably, 90% of stocks will go down. Now, that doesn't mean that they are bad companies or that they are going to default. It basically means that we are in a downturn and, there is a little bit of negative sentiment and it drops the prices of all sorts of companies and stocks. However, the operations of a company, generally speaking, tend to be the same and sometimes even better than what they were before. And so that results in you being able to buy companies for less money. And so that's something that you should really welcome. And in fact, I have bought a lot of stock during these kinds of downturns, really, because I really enjoy getting something that I like today for 20% of a discount. Like, who wouldn't want that? People tend to be scared when something goes down in value, but if I tell you that your home suddenly costs 20% less, wouldn't you be more willing to buy it? Like than the amount that you paid for buying it. I mean, it's still the same home, so of course you would. Same thing applies with companies, really, but people just tend to be, a little bit pessimistic and fearful when things go down, and sometimes they can really go down fast in the stock market. Like you can have 10%, 15%, 20% downturns in a couple of days. It happens a lot. Now, let's take a look at some industries and specific companies as well that do well during recessions. You'll see here discount retailers, healthcare, food and restaurants, do-it-yourself, things of that sort, logistics and freight. So, some specific companies here. Dollar Tree, as you would expect, people like cheaper things when there are downturns because they're more scared, and so they like to buy cheap stuff. And of course, pharmaceuticals, because everybody still needs medicine, and some personal services like taxis, and you see here drug manufacturers or trucking, discount stores, Walmart, of course. So these kinds of companies, some leisure activities. I'm not sure about airlines. Maybe that's a little bit coincidental here, but apparel as well. I mean, these things are non-discretionary in nature, which means most of those at least, which means that we need them to survive. Like we need food, we need medicine, we need apparel. We need all these things for daily life. What we don't need potentially is expensive cars, for example. We don't need that much in terms of technology, because people don't spend so much in these kinds of activities because they don't have enough money. Travel will not be doing, generally speaking, well, or cruises, things of that sort. However, food, for example, and especially like fast food companies or beverage companies that are very popular among people, like Coca-Cola, for instance, or McDonald's, these companies tend to, generally speaking, tend to do very well when a downturn hits. Now, stores that offer a lot of important products for daily life, like Walmart is, for example, will probably do very well too, or Walgreens will potentially do very well as well. So these kinds of companies that are offering products that people need regardless of how the stock market and the market and the world is generally perceiving value at that moment, and whether there is a massive downturn even. Everybody needs to eat, everybody needs to sleep, everybody needs to get their medicines. I mean, there are some things that we cannot avoid doing, and it's the first line of defense for every person. Everybody will spend money for these things, otherwise they won't be able to survive. And so when there's a downturn of that sort, and if you want to prepare for that, you could for sure take a look at some companies that are actually operating under that premise of providing food, like for example this Campbell Soup Company. And you could also be taking a look at their dividends and the payout ratio that they currently have, which is less than 50%. And that's important to know, because if there's a downturn and they don't have enough cash flow to fulfill that dividend, they won't be paying it to you for a while. That could also bring the company's stock price down. Another company that I mentioned earlier, McDonald's, of course. Whoops. MCD, ticker symbol. And we can take a look at McDonald's here, also with a very good payout ratio. And you will notice here, for example, McDonald's operating for many, many years. There's not a massive downturn anywhere, really, apart from a little bit of a downturn here, which is not relevant to the recession, actually, which happened in 2008, the latest one, barely moved over here. So these kinds of companies tend to enjoy steady growth, and sometimes could be too steady for a long period of time because of that. But it's it's something that consumers just have to get. I mean, it's products that they do have to buy. I mean, they cannot avoid food, right? Who can? So the other thing that I wanted to mention, which is also important. Now, if you buy a company, let's say that you are buying Intel, a company that I really like at the moment. Let's say that you're actually buying Intel now, and Intel being a tech company, you would expect it to go down, and it can go down. No, don't get me wrong. Now you see here that their payout ratio is 26%, and they do pay quite a good dividend yield over here, actually, pretty close to 3% almost. And the thing is, if you examine this company in detail, which we have done in the past, you will notice, for instance, in their cash flow statement over here, and again, let me take it back to 2017 to 2022, you will see here in their cash flow statement that they are making money hand over fist over here. So they have a lot of assets. And the thing is, they are making almost 20 billion a year, let's say 15 on average for the last 5 years. And they have a market cap of $200 billion, which comes down to less than a multiple of 20, really. So the company is cheap based on what the company is actually making in free cash flow. And so even if there is a downturn in the market, and we can also take a look at their balance sheet to also verify that they have a lot of assets to spend if something goes wrong, as you can see, $90 billion. So, and also the debt, they have very little debt over here. They can very, very easily fulfill the debt based on their free cash flow as well. Now the thing is, when you're buying such a company that's making so much money, they don't have too many obligations, and you bought it for a cheap price based on the amount of money that they're making. Even if that company goes down, do you really care? I mean, okay, it can go down 50%. The way to approach that is to not even think about it. Just let it go. The thing that you should be doing if that happens is actually buy more. If the company's financials continue to be that good as they were before, and it makes a lot of sense for you to buy more, why wouldn't you buy more now that you're buying the company at 50% of a discount? Why? Just because its market value is down? That doesn't make any difference. As long as the company is making money, you should be buying. Because in the long run, everything is a cycle. There will be a downturn, and then there will be an upturn again. So this is how the stock markets work. And so you should be looking to buy healthy companies all the time. And when things go wrong, you should be buying even more of those companies, because you are getting the discount. And as long as this company's business is great, they will continue to thrive over the years. And it's hard to forget what's going to, or not think about what's going to happen in the future, just because things are looking terrible at the moment. Things are looking really bad, and everything is gonna collapse, and there won't be any more money, and inflation is gonna be hyperinflation and all that. And this is what you're going to be looking at in terms of news when a downturn of that sort happens. But remember, after that downturn, things will eventually come back to normal. That's the history of the markets. That always happens. There's never a downturn that lasts for more than like 2 or 3 years. Has never happened. So it won't happen again. There could be a downturn, and make sure that you purchase good companies and add to your position when you get the opportunity to have a massive discount for companies that are amazing, that are producing a lot of assets for their balance sheet and are producing a lot of free cash flow. This is what you should be looking at, and don't be scared about potential downturns. But if you want to be extra careful, you should look to add some companies that are handling consumer discretionary stuff like food, as I mentioned earlier, food, apparel, things of that sort, things that people need, pharmaceuticals, things that people just have to buy, otherwise they cannot survive, basically. So hope that helped you a little bit with your selections about stock picks when we're talking recessions. And I do want you to remember that as long as you pick good companies, you won't lose in the end. And one more very, very important thing, this is why you should be investing money that you do not need for the next like 10 years or so. This is extremely important. You never invest money that you could potentially need. Not that you need, that you could even potentially need. So if you think that there is potentially a need that you would need some of that money, you don't invest that. You only invest the extra, the money that you don't need ever. This is very, very important for cautious and proper investing. You always have money that you use for your daily expenses and life and everything else that you need for, and the extra you use to invest. The moment you do not use the extra money to invest and you use money that you potentially need, you could face a downturn of like a 50% down on a stock and be like, okay, I need that money, and like I'll have to get it out because it's going down and down, and I potentially will need it for my rent or something of that sort. This is when you lose money. And when you do that, a year from now, that same stock will be up 200%. So that happens a lot, and it almost will happen with most of these stocks if a recession happens. It's how it works. So hope you enjoyed the video. Hope you liked it, and if you did, please leave a like and subscribe. And as I mentioned, I'd love to see you in our Discord channel. You can find a link below in the description of the video. And if you did enjoy this one, take a look at the video that I made about Micron, a very, very well-known semiconductors company. And I'll see you in the next video. Bye-bye.